if you stick to your money management system, you won't have a problem. I mean, you could easily start with 1% risk easy every trade and then load it up on the way, so that when you have a bad trade you lose 1%. But if you have a good trade and you've loaded up good, then you can make like 30%, 100%, maybe 2000% on one trade. Everything is possible. I mean, I have a lot of students who already prove that it's possible to make really crazy account flips on just one trade. And yeah, you just have to give the market a chance to fill your pocket with a big move. Yo, what's up, team? I hope you're all having a good time. Now, today is the day where I'm gonna go over a couple of charts. Let's see what we have. So this one is Dow Jones, US30. As you can see, we have a really nice bullish trend channel, and yeah, the market on Thursday and Friday was was coming down really heavy. Clearly broke the bullish structure over here. We had this bullish structure, got broken, clearly, boom. Now the bottom of the trend channel got rejected. We have a huge wick, and it looks like buyers were stepping in heavy. Looks like buyers were stepping in heavy, but got rejected as well over here. So we have a big wick over here. So what is going to happen next, guys? Well, we have this lower high over here, and if this one gets broken again, it is no longer a bearish structure, and then we can search for nice buy entries. Or yeah, we already missed this one. I mean, if you go to lower time frame, and you can really see what was going on. We had this drop, pullback, and then it got rejected, something like a double bottom, and then the break of structure over here, nice and clear. So if we would have not missed this one, and this would have been a good buy entry over here, or on the retest over here, somewhere in this area, we could have buy this thing easily, and then let it run and move the stop with the structure on the smaller time frame and see what's going on. I mean, if we have this 4-hour bullish trend channel, and then we go to the smaller time frame, and we see this huge drop, and then we see this clear rejection, clear support level, and then the bullish structure started. I mean, we could have easily draw our Fibonacci's from here to here, and from here, from this low to this high, and then we could have entered around in the 50% or 61.8% area if you like to use the fibs, or you could have used it here and entered around the 61.8 or 50% area. Like, if you want to use Fibonacci for to get a nice pullback entry, you can do this. But if you just watch price action, I think that's enough. So Fibonacci is no magic tool. You can use it for getting in, but you don't really need it, because if you can see this structure like pushing up, pull back, pushing up, pull back, and then we have this resistance over here, boom, got broken clearly. Now it should be the support level, if the price comes back to that level, and this is what happened. It reacted as support, and then you can see how the price was moving strong to the upside. And yeah, so always check the higher time frame to check the environment, to draw up your trend channels, to draw up some significant levels where price was bouncing a couple of times. And if the price comes near that area, you go to the lower time frame, and then you look for price action to get really nice entries, you know, and then you can make really good trades and get in and out on the same day, make fast cash, you know. So yeah, this is the US30. Let's check gold. On gold, I was not trading the last 3 weeks, but gold had a huge sell-off, came back a little bit, sell-off again, came back a little bit, sell-off again, and now it is moving in this channel that you can see over here. And of course we can try to trade in between this channel, maybe try to ride it from the bottom of the channel to the top of the channel, maybe speculate for a breakout move or something like that, or we can wait simply for a breakout of this channel. Like if it clearly wants to move down, maybe break this support level as well, and we can sell this thing and see how far it goes, or we can buy this thing on the bottom of the channel and see if it goes, if it moves to the top of this channel, or maybe to speculate for the breakout here as well and hold on to it, or we can just wait for a clear breakout to the top, or we can wait for a clear breakout and retest on the top of the channel or on the bottom. Like we can wait for a breakout, come back, retest, and sell it down. Then it really depends on how you like to trade. Okay, so what I would do over here on gold is I would check the smaller time frames and see what we can do. I mean, we already had a break of structure. Some buyers got tricked to buy over here. Then after that they got stopped out violently. We have a double bottom, and now it looks like a bullish structure is about to form. Yes, this is what I see. A bullish structure starts to form, so it could be the start, it could be the beginning of a bullish move. And it's on the bottom of this zone, so it could probably be a really nice opportunity to buy and to let it run around, I don't know, 1950. You're gonna have an obstacle, that's for sure. Boy, if it goes through, I'm sure we can smash the top of the channel again. So yeah, this is what I think about gold. Really have to check the structure on the smaller time frames to get an understanding of what's happening, and of course to manage your position, to move your stop with the structure, to load it up on the breakouts, on the break and retests and all that stuff. Like really need to get an understanding of market structure and what the candlesticks are doing. I mean, you need to understand what's going on. And yeah, what else we have? USD CAD, huge bearish trend channel, as you can see. It really nice. It respected really nice the horizontal levels. You could really trade the break and retest all the way to the bottom, like boom, break, retest, boom. You have another retest over here, then boom here, over here, another retest, couple of retests over here, boom boom boom. Really nice trend channel, really nice. A lot of selling opportunities, and and I would really check out for selling opportunities on this channel, on this market. I mean, we could have an obstacle over here. This could be an obstacle where price maybe tend to turn around. Let's see. But it looks really bearish to me. It looks really bearish to me on all the time frames. This is a 4-hour 3-leg extension. Price came back really deep, so yeah, it could be really a really nice beginning of a downtrend move. Boom, boom, boom. First one, retest, boom. Maybe market will come back around in this area, and then for the next push to the downside. But yeah, let's see. I really would check out for good selling opportunities. Maybe on a retest of this support level that got broken, could get in and around in this area. You can draw your Fibonacci from somewhere around here to here, and then mark up this zone like somewhere around in this area. Price coming back in this area, you can get in for a sell-off. This is what you can do. I mean, it really depends on how you like to trade the market. It's just important that you always do it again and again and again. Even if you get a couple of losses, like even if you lose a couple of times in a row, like 3 times, 4 times, 5 times, 6 times, it doesn't matter, because you're going to have the same thing on the winning side as well. You just need to be patient, overcome this losing streak with good risk management, okay? And then always take the next trade with the same confidence. Even if you lose like 5 or 6 in a row, you have to stick to your game plan and keep trading the way you trade. Don't mix it up. I mean, you lose 4 times in a row with the same strategy on one market, okay, and then the next 4 to 5 trades you don't take them because you're not confident in with your strategy, and they all would have been winners and they would have grown your account tremendously. You know, you really need to stick to your game plan. Even if you take a couple of losses, have the confidence to execute the plan and to overcome these hurdles, to overcome these clusters of bad luck, okay, because the good luck is waiting, is waiting for you. You just have to be consistent, and with good money management you can easily take 10 losses in a row without wiping out your account. I mean, if you trade with 1% risk or 2% risk, or even with 3% risk, it is easy to overcome 10 losses in a row. I mean, it hurts, and I had this as well, especially if you're chasing a trade and you get just wiped out of the trade all the time. I mean, nearly every trader has that. Sometimes the emotions kicking in, and then you chasing a trade and you just get fucked. But if you stick to your money management system, you won't have a problem. I mean, you could easily start with 1% risk easy every trade, and then load it up on the way, so that when you have a bad trade you lose 1%. But if you have a good trade and you've loaded up good, then you can make like 30%, 100%, maybe 2000% on one trade. Everything is possible. I mean, I have a lot of students who already prove that it's possible to make really crazy account flips on just one trade. And yeah, you just have to give the market a chance to fill your pocket with a big move and have the confidence to load it up. You need the balls. Yes. And yeah, and then just load it up, make some money. I mean, for example, this one here on USD CAD on the top of the trend channel, Just check the 1 minute chart, and as soon as you see it's breaking through, you could have get in over here. So you could have got in with a sell position somewhere around here. Stop above the structure. We don't have targets yet, okay? Let's just do it like this. Boom, this is the first trade. Then on the retest, you could have get in again. Sell position. Somewhere around in this area, you get in again. Stop is over here. No targets yet. And then, as soon as the market is breaking out of this level, boom, you could have get in again. Somewhere around here with a sell position. And then you move your stop above this structure. So you have 2 trades with nearly no risk at all, and 1 trade with a little bit risk, but nothing crazy. And then, okay, market was breaking out, coming back, breaking out, and then over here on this breakout you get in again. Then you see the market is clearly moving. So you have this one with risk, this one is without risk, and they are both big in profit already. Stop is over here, big in profit, and you start playing this game, this candlestick loading it up game, you know. And then, okay, the market keeps moving, making a low, pulling back, then boom, you get in again over here. Stop is above the structure, but always give it a little bit of space for the case that it will retest this level, and then you if it retests this level, you have to calculate the spread as well. So if the market is coming back over here and you are in a sell position, you are going to have a little bit of spread of a couple of pips. So give it some space, just a little bit, you know, just to make sure you're not getting stopped out on a retest like this. Okay, so yeah, you're getting in, then the market is retesting strong, boom, breaking out again, and then you get in again. It's over here, boom, move your stop above the structure over here. I mean, this is a little bit tricky. You could have been stopped out over here, or you could have had a little bit of luck and continue to play this game. I mean, you could have entered over here again. If let's assume you're still in this game, you're still in this trade, you could get in again over here, then move the stop over here just above this structure. So just have, like, we have one, two, 3 trades with good profit, 1 trade with a small risk, 1 with a bigger risk, 1 with a bigger risk. But you can still play this game. Wait for another breakout over here, boom, get in again, move the stop above this one here. So nearly all your trades are in profit already, and that's a nice thing. I mean, this one is without risk, this one is without risk. So you have like 1, 2, 3, 4, 5, 6. This is the position number 7 over here. So market is moving, boom, and then, I mean, you have this huge drop. Market came back, and I think I would have exited around in this area. And after this pull back, then you have this huge move. Market is coming back. I would exit over here, and then, yeah, I'm sure you have made good money over here just on this move. I mean, trading the smaller time from the 1 minute chart, it is time consuming, but it's worth it, guys. I mean, you start here with 1% risk and then you load it up. You move the stop, you can put another 1% in here, you could put another 1% in here, put another one in here and here. Boom, boom, boom. And then you're trading with really a big load of money and make a lot of money, of course. We have like 8 positions over here. Like 1, 2, 3, 4, 5, 6, 7, 8. Yeah, 8 positions. We started with 1% risk, and after that our position size is like maybe 8 times bigger or maybe 15 times bigger, depending on how you scale it up. I mean, if you got something in profit, you can trade bigger position size, you know. It really depends on how you like it. You can make it bigger, you can make it smaller, you can put in the same amount of the same volume. It really depends on how you like to trade it, but there are a lot of possibilities. And yeah, you start with a small risk, and then after that, boom, your position size is really big, and it's the 1 minute chart. So this is just a couple of hours. Like this would have been started at 5:30, and we would have gone out at 9:30, 5:30 to 9:30. This would have been a 4-hour trade. A simple 4-hour green candle, guys. And you've loaded up big time on a 1 minute chart, you know. Sorry, not a green candle, a red candle. Easy. 4-hour red candle. Boom. Really nice. It is a small move, but even this small moves can make you a lot of money if you trade in the smaller time frame. The structure on the smaller time frame, everything goes faster. I mean, you can do this on every time frame, but I think the smaller the time frame, the more money and the faster it goes, you know. The more money you can make and the faster it goes. And that's why I like to really play the 1 minute chart. It is really, for me, you really have to be in the zone. You have to stick your head in front of the screen and watch the trade all the time. Move the stop whenever you get another breakout. You know, you really have to be in the zone if you trade in the smaller time frames. You cannot go away from the chart and let it run. You really have to manage it all the time. But the time is worth it if you understand the candlestick game and if you understand how to write the structure, okay? It is really, yeah, I think it's an easy concept, but it is not easy from the emotional side, because if we are in profit, we want to bank the profit as fast as we can, and we are scared to put some more volume on the table because we are scared to lose the trade, you know. We are scared, and that's why most of the traders are not able to make money in this game. You know, you really have to overcome this emotional hurdle. You have to load it up on a good run. You have to cut your losses really quick. I mean, taking a loss is alright. I mean, if you stick to your money management system, it's not a big deal to take a loss. And if you know how to load it up, I mean, one trade can wipe out 20 losses in a row. If you have a good run, if you have just, you know that the market is doing crazy stuff. Sometimes it moves so quick. And if you're in this trend move, and if you are in this move, then you're gonna make a lot of money, you know, if you have the balls to load it up. And yeah, there's no secret. It really is just the emotional hurdle you have to overcome as a trader. You have to load it up on the good runs and take the bad trades out of the game really quick. You know, take them out really quick. As soon as the structure is broken, you don't want to be involved. You just want to trade the structure, okay? And this is what we do, guys. This is what we do. Really easy. Yeah, I think this video is long enough. I hope this was helpful. And yeah, let's see what we can do the upcoming week. I really love to focus on just one or two markets maximum because I'm trading a lower time frame. But if you trade in the structure on the bigger time frame, if you give the market some more time to develop, you don't need to watch it all the time. You can trade more markets. But I don't have the patience. Over the last couple of years, I really developed that I'm more type of trader who needs to make this money real quick. I want to be in the zone. I want to trade the price action on the smaller time frames because it's just more action. I think for me the bigger time frames, of course, they are helpful for me to understand the environment, to analyze the environment that I'm trading, so that I know in what kind of direction I want to trade. But there is no action, and I love action, and I love to take action. So that's why I'm trading the smaller time frames. And let's see, guys, what we have for the upcoming week on gold. Maybe we can see a nice breakout, or we can trade it in between this channel. I really have to check the structure and just go with it. I mean, just take one nice move. I mean, like, this move is from 1920 to, like, I don't know, maybe until 1970, and it looks so small on the 4-hour chart. I mean, it's just such a small move, but there is a lot of money inside of this move if you know how to play it right, Yeah, and this is what you need to understand, guys. But anyways, I'm gonna cut the video right now, take my dogs for a walk, have dinner with my mom, and just enjoy my Sunday. I hope this was helpful, and I wish you all the best, guys. Peace out.
Fly me to the moon. Forget what you know. Every time.